Welcome back, guys. In today's video, we're going to talk about the difference that volume makes. Now, that may sound crazy just to say it so simply, but it really is a big factor. And if you're not using volume with your key levels, with your price action, then you're probably not being a good trader and you're losing more than you're winning. But before we jump in and I show you exactly what I mean using today's live market, I want you to hit that like and subscribe button so I can continue to make these videos and make you a better day trader. So one common theme that I get is understanding key levels becomes pretty simple. We start to notice these places on our charts and we start to be able to see price action pretty good. There's always candlesticks, the patterns and formations. We start to see those. However, we get caught up in getting in at the wrong spots. And a lot of that's because you're missing one critical element, and that's volume. So what we want to use is we want to use volume to either validate or to show us that the price action is false and then wait for a better opportunity when volume is entering the market. If there's no volume, then there's no trade opportunity. I need you to put that in your brain right now. If there's no volume, it's not the right time. And volume is going to precede price. So especially when you're a day trader, we can't get caught up in looking directly at only the 1 minute volume chart underneath what we have going on. We want to look before and at relative volume. So I'm going to give you a trade example from today as we created these new levels and we had some volume. If there's going to be a result, a move upward, downward, or sideways, there has to be effort, okay? So if we don't have effort, then we're not going to get that catapult to the sky. We're not going to get that drive down into the ground of price action. There has to be volume present. Let's take a look at the chart and make some sense out of this. All right, so if we look at today's chart, I'm not going to go heavy into the levels. I do have another video that you definitely need to check out. That's basically the part one of how do we even start by creating the roadmap, creating levels. We want to keep a clean chart, but we want to know where things are happening. So sometimes we've got to add some levels in there, and I have a really simple formula to start the day and then how things can change throughout the day. But in this video, we're actually going to talk about watching volume as we get to those levels. And so here in this example, we have a pre-market high, and then down here is really the other levels that are going to stay kind of the same throughout the day. They're not important, they're not relevant. So today we had to utilize some of these agreements that we find on the 5-minute chart. So after an hour open, we had this agreement here, and then we had this bottom agreement that's our supply and our demand area. This is where sellers were. This is where buyers were. And we were able to use that. And some students were able to take this trade and get a call here and then take it at the supply zone, get out. I had one student that ended up she just started, so she made $124 on, I think, just 3 contracts today. Really incredible move on just this. But what happens when we have these trending days? This is the number one hiccup with newbie traders and experienced traders, is these days where key levels are a little bit harder. That's where volume and price action becomes so important. In this video, we're talking about volume, and I want to show you 2 different examples, actually 3 examples from the same day where volume allowed us to know kind of what's going on, gave us the heartbeat, okay? So basically we broke out here on to create new highs. And again, this is where we would have to change the levels, but we had a new agreement because all this became pretty irrelevant. So that doesn't mean that we just can't look for anything, because there's still some opportunity in the market. We had a new agreement that kind of formed here. We had a green candle and a red candle. We call that an agreement. So we had a new key level, right? And then it kind of broke out into this level here, which looks almost exactly the same. But yet here, when we approached this level again, we didn't have the same result. We didn't break through to new highs until over in this area. And there's a really important concept here. And it's so important because as a trader, whether experienced or newbie, I see a lot of people that are like, I had the right idea, but I had the wrong timing. So in order to work on your timing, you need to start understanding volume. So we have these agreements here. Let's look at the differences in the volume profiles with the price action on the 1 minute chart, which is what we would be trading, and how we can use that volume in the future to make a better decision. So We're going to go into the 1 minute chart now and just look at these different areas. Okay, so again, we have really strong volume that's pushing this market up into here. Okay, and if we look down here at the volume, as we reject this area and we see the selling, right? Look at how volume just dies. What does that tell us? That tells us that there's not a lot of volume, there's not a lot of sell orders getting picked up here. Everything has been active buying. So if this were going to reverse, we would start to see kind of more so of kind of what we saw up here, where the volume picks up and it stays strong and we start to see price action move down. Okay. All right. But we don't see that. We see volume kind of die off and then we get above this key level. So we have a new high now. And then look at all this volume packing this punch right here. So basically look at these candlesticks from 1144 to 1150 right here. So we match that with that. Okay. Now, when we're looking at effort versus result, it's a very critical concept when you're talking about volume and price action together. The effort should match the result. If the effort doesn't match the result, then we have an anomaly. When we have anomaly, we need to pay attention. So if we look over here, so let's just say up until this point, we're moving up and we see this strong candlestick. Kind of makes sense. This one really makes sense. Really strong green candlestick supported by really high volume, 100,000 on the volume chart down here. This is validation. This is true buying, active buying. That's why we've seen the chart continue to move up. Active buying caused this chart. Although the volume didn't stay that high, it kind of teetered down a little bit. That was enough to push price up. Okay. Now we look over here. Look at this volume. All right. And look at these candlesticks that we have. Indecisive, small bodies. So my students know that this is kind of an anomaly because the effort should be matching the result. So we have strong, pretty above average volume here. So we should have some matching result up here, stronger candlesticks. And what this is telling me is think of markets almost like a rubber band or a coil, so to speak. You wind it up, and then the more you wind, the more pressure or volume that we put in there, the larger the pop's going to be. It's cooling, okay? I don't know if that's a good example or not, but that's the way that my brain uses. So we're packing all this volume into this. So we're waiting for the move, all right? And at this point over here, a lot of students are like, well, Dustin, look at this volume. There's not a ton of volume on the 1 minute chart, but you got good price action. That's why we got to remember that volume precedes price action. And we want to pay attention to that. So we did have good volume, especially like in this candlestick. So again, moving to another video that we're going to do here on YouTube, the third critical element is price action signatures. This hanging man, which means that we dipped down and we got all the orders that were down here and then we moved up. We closed this candle high on high volume. There's a lot of volume in this candlestick. And that proceeded to push us on up here until we started to regain some more volume as we push the market up. Okay, so that's why we were able to break out of this zone because the volume was there. Now, as we went up, we had this other zone that kind of pulled the market back. We created a new major supply, okay, and a lot of students got caught in some bad positions over in here. And the reason for that was we started to see, now again, if we're looking at this over here, these candlesticks, if you look relative to the volume that we had over here, you're talking about half. We got 42,000, but over here we're up at 90,000. Okay. This volume that packed the punch was about twice as much as what we have over here. So although these are above this little line here, it's not the same volume. It's not packing the same punch. So that's why when this got above, we didn't really see a strong move. We didn't see a move because the market wasn't ready. So then as we start to bring back into pullbacks, you'll notice extreme volume comes in right here again, right into this large candle. And at that point with going back to validating on volume, validating price action, would we consider this validating price action? Absolutely. Look at the candlestick, full green candlestick, and look at the volume the highest volume of the day, that's exactly what things should look like. And then it's no surprise that price starts to catapult, and then eventually the rest of the day it grinds up. Okay, and again, price preceded, excuse me, our volume preceded price. So a lot of times we want to talk about getting the best risk to reward ratio. This is another piece of step 4 in the strategy. Is this might not have been the best opportunity, although for what we do, you could have grabbed a quick one. But the best opportunity is not the initial breakout. It's when we retest over here and we still have above average volume. Again, this is now 80,000 right here. Now we can take this entry and it did go sideways for a little bit, but eventually it started to break out and make those new highs. So as you can see from this video, we have key levels that are changing, and that occurs especially when we're day trading. Some of your key levels can be fluid, and I'm making a whole nother video that we'll link below about that in terms of key levels, especially how they can change throughout the day. But in this video, we wanted to focus on volume and understanding that volume is telling you the story. It's helping you paint that picture with price action on whether or not we're actually going to continue to move up, if it's time to move down. When you combine the two, it gives you a real glimpse into the heartbeat of the market. So in the two examples here, on one of the moves up through a key level, we've seen a really strong base of volume building. And then after that, price action proceeded to move on up. On the next example, we had that key level that formed, and then we had half or really under half of that volume, and that caused it to where it couldn't move up and price stagnated, and it didn't move until later when we finally did get that price action that came in at that point, or that volume that came in. And at that point, the market made another leg up, and it's all proceeding on volume. So guys, to wrap up here, in the pivot precision strategy that we use, we're looking for key levels. We're looking for volume to validate price action, critical element. And then we add in that discipline of selecting the right stop loss and take profit areas. And then we make a successful trader. It's why we've had so much success with our students. We break it down into a simple process. We share everything here, but sometimes you have to have that little bit of boost. And I hope that this has cleared some things up for you. Like always, hit the like and subscribe button, share with a fellow trader, comment below, let us know what you want to know about next.